Hello everyone, welcome back to another episode of Simply Investing. Sorry I meant to do this video a few days ago, but I didn't like the quality, plus just didn't come off the way I wanted it to. But anyway, this video is in about to my Robinhood App experience and my experiment that I started in March. $20 investments per week, or $20 deposits per week to get, and to see if I can manage it into something that is beginning to have value. So for a year, I had my ups and downs, but a year I ended at 88% up. That's a substantial amount, 88% up for the year. I can't believe it myself. What was the key factors in that number is the up and down trading on Bank of America. Bank of America over the year was religiously $15 to $18, $15 to $18. It's just somewhere in about there. So you invest on the low, it bounces up, you sell when everyone else is buying, and then of course the stock market falls again, and then it just keeps doing the same thing. It seems to go right in tandem, no more, no less. Like, you don't see it drop to like $13 a share. You just see it go down to 15, and it goes up. And doing that every day, every week, every time that happened, first it was just a few bucks here, Before you know it, I'm doing it on about 20, 30 shares, and I'm starting to make a good amount of returns. Also, part of it is buying cheap dividend stocks and a couple of value stocks. So there's a couple stocks I got in there, like iTech. I got in there when it was really cheap, and then it went up to I think like $18, and I sold. And stocks like that I made some quick value out of before it went down. But I can say the one thing that attributed to the success was I had patience. I respected the process. I stuck with my term investment. I did not deviate from anything when sell-offs happened. I stayed true to my strategy, and I made money. So now that I've taken what was roughly $620 in deposits for the year, and it now stands at, $680 in deposits for the year. And now the portfolio now stands at $1,280 roughly right now. So we'll see what will happen with another year of steady investments. My experience with the app has been great. A lot of people are doubting it simply because it's an app, and it's hard to trust because there are a lot of scammers out there. But if you're investing only $20 a week, you're really not going to lose anything. Even if the $1,200 was lost, it's not like it's a big deal in the long scheme of things. For me, it's really just like losing, and for most people, it's like losing about a week's worth of, or like a bi-weekly paycheck for most people. It sucks, but you'll survive. I like the fact that they finally added the dividends. So now you can go into your little account profile and see when your scheduled dividends are coming and what dividends you got paid. I like that. I do like the trading system. It seems to have gotten a little faster. My next thing I'd like to see from them is being able to place and trade on after hours or early hours trading. That'd be something that'd be pretty cool if they could do. But not many firms can even do that either. So there's really, how can I put it? There's really nothing about that, but that'd just be pretty cool. What I think they could do though is give us more data via the app. So when we select a stock, other than seeing what it is, I think we could do a really good job at getting, because they got the reports going, which is awesome. They give you a feed of relevant news articles related to the stocks in your watch list and in your portfolio. Awesome. Thank you guys. Awesome. One more good thing would be when you look at charts, you can look back 10 years or 20 years. Like, you can select any amount of years to get any amount of information off a stock. I guess the next step I would like to see Robinhood take is, I would like to see it to become more than just an app. Although their app was their kind of like their core competency, what they're striving to do, and I get it, that's their business model. But it would also be nice to be able to manage your account online, like on your computer rather than just on your phone. I get it, it's supposed to be an app-based investing method, but I would like to see it become something more. I would also like to see if they could do payroll deductions, because that would be something I think everyone can benefit from. You can put payroll, you just take a percentage out, even though you can manually go in and every day you get paid and you can deposit in there. However, for most people, they don't like to think about it, so you can always set a percentage, like take 5% of my check, or partner with some firms, like, well, not firms, but companies like Walmart, Target, big retailers, get their employees involved and just say, hey, this is another avenue of investment for your companies. Give them 5 to 10. Let them invest up to 10% after tax earnings, not before tax, after tax. So it kind of gives them something in addition to their portfolio, in addition to their 401k that they're going to invest in. So, I mean, that's been my experience with the Robinhood app. It's been absolutely wonderful for the years. I know there's a Facebook page about Robinhood App traders, and if you're interested in following that, I suggest you go and follow it. I will put the link in the description below. The markets have been crazy for the first week of the year. Like, wow, like it's been lots of ups and downs left and rights. Oil, last time I checked, was at $32, not $32, I apologize. It was like $33.25 a barrel. It's getting closer to my price target, which was $30. I really think it can be $30. I really, really think it can be $30. If it gets lower than $30, I would be surprised, because I just don't think the market can handle it under $30. Not just the stock market, but the oil markets, like everybody involved in it. I don't think they can handle it being under $30. I just don't. But with that said, that does affect a lot of things. With oil down, and oil's going to be down for a while, and I'm sorry to say this, Americans, but when it comes to saving money, Americans aren't the best. So what's going to happen with oil? They're going to start buying bigger cars. So maybe now's the time to buy Ford and GM, because oil's going to be down there for a while. Even if it climbs back up, we're not looking at over $100 a barrel again. We're looking probably at $40 a barrel. So if you're looking to kind of gain in on that momentum, I would buy, if you could, buy oil commodities and hold them. What I would also do is buy Ford and GM, because those car companies manufacture the most trucks and SUVs. And with America, they're going to start buying those again. It's like seems like when America doesn't have to spend $100 to fill up that tank of that big truck, they go out and they buy the big truck. Instead of saying, well, I only have to fill up, how about once a month, I'll go buy a Toyota Camry or like a Honda Accord. They don't think Americans don't think like that. They're going to go right out there and they're going to buy and they're going to consume more. So with that said, I would buy those guys. I'd give it a little bit of time, and then I'd buy like ExxonMobil. When you're getting into those stocks now, I could say in about 3 or 4 years, especially for your long-term investors, those are probably going to turn out to be very, very, very well. As far as the tech industry, especially the online, I don't know. I really can't pinpoint you in the right direction to there. I'm still strong Apple. Why? Because every year they say can't be beat. Bad numbers. I mean, they've been saying this year after year after year after year, and they just keep making more and more and more money. And to me, it's just like, does a company really have to be groundbreaking to be worth a lot? I mean, the company's got over $200 billion in cash. Why would it not be worth anything? The company can afford to make mistakes, unlike a lot of other companies. I really couldn't tell you guys what would be a good pick in there. I would definitely say don't invest in Twitter. I would say don't invest in Facebook right now. It's kind of capped out. It's really not going to gain any more momentum. I mean, when you reach 1.5 billion users, you've kind of, you're starting to hit the max of your capabilities. As far as the value, the revenue doesn't even suggest what the value of Facebook is. That's my opinion. There's a lot of people who disagree. One thing I don't like about what's going on is millennials are picking the wrong stocks. Yes, they're following the rule, picking stocks they understand. But I don't even really think they're picking stocks they understand. I think they're picking stocks they know. Like I said, I would not invest in social media because it's social media. What's the problem with that industry? People can stop buying the main provider of services that they rely on, and all of a sudden, boom, people are no longer on social media. If you're broke, I guarantee you're not spending $200 a month for a smartphone and a home internet. You're probably going to cut those things. Those are going to be the first things you cut. You're just going to get a regular talk plan, and you're going to go from there. And then when you get used to without it, you eventually realize you really don't need it. And that's what gives me the leery of investing in social media. It's like, yes, there are people on there. Yes, there are people on there. It's used very heavily. There's a lot of impact to society. But I think, like everything else, it's just starting to mature and run its course. And I think the generation after the generation that is being born now is not going to use it. Is not going to use social media at all, as opposed to millennials and the next generation. And even millennials are starting to use it less and less because they realize how much of a negative impact social media has on you. I mean, they're even almost kind of basing your credit score off of your Facebook account and your Twitter accounts. So do you really want them to determine whether or not you get a home loan off of something you've done when you were 22 and now you're 32? Probably not. You might think it's unfair, but everybody's posting that stuff and they're making it public. So that's why I'm just weary about that industry. I like tangible goods. But for the finance sector, I think it's going, in a few years, something's going to happen to it. It's going to have like not a correction, I would say, just a kind of like people reevaluating what they're doing in there. Right now, banks make money off of fees, not off of loans. And loans are what make the economy run in a debt-based society. I mean, we need people getting loans for homes, for cars, for businesses, for projects, for remodeling. We need people borrowing money to do leverage on based investing. You need that money to be spent, and that's what drives the economy. Our problem is that banks aren't doing it anymore. They're just kind of sitting there passively. And I get it. They've been burned by 2008. But that was their own damn fault. They need to get back out there and start lending to the American people, because the American people, whether they have a 800 credit score or 600 credit score, need to borrow money. Otherwise, our economy is going to go down again. Because if they can't borrow money and spend, we're going to have another crash. And we're in the midst of us realigning anyway, because I think as a majority of Americans realize, they're no longer spending as much. What they're going to do is they have the money. It's going to become a cash and carry system. If I got the cash, I'll carry it out. If I don't got the cash, it stays right where it is, which is a great philosophy. We've been taught that for generations. Live within your means. Buy what you can only truly afford. But my generation, millennials, have an extremely high sense of self-entitlement. I gotta have the nice car. I gotta have the big house. I gotta have, 3 cars instead of 2 or 1. Even though they say statistics are saying, well, people are moving to 1 car families, with everything now, I don't think so. And I think the next bubble to burst in the finance industry is the auto loan industry. I think the auto loans are going to burst because they are giving some shiesty auto loans on things like you can't give a loan that's already underwater. Like, do you understand? Like, that's insane, right? So you're going to get a loan on a car right now they're giving loans for 19% interest on a car, and the car is already devalued halfway through. So this person already is paying twice as much as what the car is worth. That's a damn shame. I get it, because people say, well, that's their problem, that's their fault for having poor credit. Yes, it is your fault for having poor credit, and it does suck. I've been there, but it doesn't mean you should be grossly taken advantage of. That I don't think so, but that's the way our debt-based society is. You got good credit, you get rewarded. You get bad credit, you get punished. But the problem is, what people don't understand is you can go from having good credit to bad credit in a blink of an eye. In a serious blink of an eye. Like, you just can wake up one day and just like, shit, I went from 850 to 550. For what? Because all of a sudden your mortgage is underwater, so now you have an underwater debt, and you're over leveraged, and boom, there goes your good credit score. And there's nothing you can control about it. Or you get hit by a car, you get $150,000 medical bills, and now you're in bad credit. I think people like that do need a second chance. I think they need to come back with some fair, equitable loans for people like that. But I don't think it's going to happen until after the auto loan industry kind of goes. I mean, that's all I got for this morning. Good luck, guys. The market's doing another rally. Probably rally 3 digits today. With that, stay true, stay safe. Bet, trade. Don't overbet. Don't overtrade. Don't overcommit. Stay true to the process. Respect the process. Follow the process. Understand the process. Live the process. Don't get too emotionally attached to the money that you have in there. Otherwise, you will make mistakes. Thank you guys for your support. We're almost to 100 subscribers. Keep subscribing, keep liking. Thanks guys for your support. Hopefully in a few more months I'll be able to have a nice little studio to kind of put all this together, so I don't have to do this in my car anymore. Although I like the car chats, I think I'm going to keep the car chats as kind of a little segment. But guys, I really hope that I can get that studio set up. I already kind of figured out what I need. I just need to figure out how I'm going to build it in my house. Keep commenting. Guys, the comment feed is your best tool. I'll try to answer as quickly as I can. Like the Facebook page, comment there, discuss, chat, talk up stock, do whatever you want to do on there. That's what those are for, because the more people that talk, the better you're going to get at making it an investment or an investment decision. Also, I'm going to start a new series. Not really like a new series, but kind of like a little subset, because a lot of people always say, well, it's hard to start a business, but they always admire people who do it. So I'm going to start a little online business and see how far I can take it. And like and comment below, see what you like about that. Give me feedback, because it's going to happen regardless of what people want. But I'm going to do the videos, just kind of do just small videos, just updating progress on how that business is going. With that said, good luck guys. Trade smart. Best of luck. Make some money today. I will see you next time.